Hello everyone, this is Edwin Epperson, your host of The Sophisticated Investor. The Sophisticated Investor is an incredible community which is focused on education, training, and collaboration to help each of our members, and that includes you, to build, protect, and preserve your family's generational wealth. Now, I believe that we truly have a unique and one-of-a-kind educational community. For one, I believe that there are 4 primary markets, not just one. I believe that those 4 primary markets include your personal finance and mindset market. I believe the second market is your hard, tangible asset market. I believe that the third market is your stock and paper market. And I believe the fourth market is your business investing market. Now, those 4 markets are imperative to be able to understand and then call yourself a sophisticated investor. Today, we have an incredible guest who is going to educate us on their preferred market of investing as well as the assets that they like to invest in. Please join me as we welcome today's guest. Hello, everyone. This is Edwin Epperson, host of The Sophisticated Investor. And today we are going to have an incredible conversation with Mr. Jack Miller. Jack, welcome to the show.
My pleasure. Thank you for having me on. Hopefully you're having a great day.
Absolutely. Absolutely. Thank you for taking some time out of your day to be on the show with us. And real briefly, I want to introduce you to our listening audience for those of them who don't know. Jack Miller has been in the real estate investing time frame since 1987. You have completed over $1 billion worth of loans in the lending sphere. Over tens and tens of thousands of loans. You have managed, your company manages hundreds of millions of dollars in a mortgage portfolio currently. And you are actively involved in the commercial real estate, and that covers a very broad spectrum of assets under management. So thank you, sir. We know you're very busy, and we want to thank you again for taking the time to come on the show and divulge some of your wisdom and knowledge to our listening audience. So welcome again. One of the things that I just wanted to dive into, when somebody reads your resume or when they maybe meet you, connect with you on LinkedIn, which I know you have a LinkedIn profile that I will give to the listening audience to connect with you on. But when they read what you've done, what you've accomplished, some people may assume that well, you were born that way. You were born into this wealth. You had all this knowledge. You had all these advantages. Could you walk us through sort of how you started? Like, what was like a childhood like for you? And were you a privileged, advantaged person, as some may think?
I believe anyone who was born in this country has certain privileges by itself. But I certainly wasn't a privileged child. While I did have great parents and grandparents and brothers and a close family network, the reality is my childhood wasn't a particularly pleasant one. I'm dyslexic. And in the 60s, dyslexia, when I went to school, you were called brain damage. So I really did terrible at school. And my public education, my schooling, every day was a torturous day. And the truth is, I don't want to get too much into the school system and dyslexia and how it was treated, but the truth is it wasn't a great childhood for that reason. I started to thrive when I got in the working world, and from the time I was a very young age, I'm guessing 10 or 11, I used to sell pretzels on the street corners of Philadelphia, sell coins, take summer jobs, sold pencils, literally anything you name it to make money. I could. And to me, the pure opportunity that someone could say, hey, with your hard work, no skills, no education, a lousy reader, terrible grammar, terrible spelling. This is way before spell check. You could, through your determination and your gut brute force, can go out and make a living, was unbelievable to me. So I viewed everything as an opportunity. And I didn't mind if it took someone 5 minutes to do something. I didn't mind spending 5 hours on it, or I didn't mind keep swinging. Certain people seem to go through life and they always hit the nail on the head the first time. I'm the guy who hits the nail on the head the 20th time.
There you go.
And just story. Yesterday, out of the blue, I was paid on something that came out of the blue that I've worked my butt off for probably 7-8 years on. So it's the typical saying, it takes about 10-20 years to be an overnight success. And that's my story. Nothing has ever come easy for me.
Well, excellent. That's so. I want to dive into that because I think a lot of people, especially in today's, in the proponent, and we're in this age where the university, a degree, and you may have a degree, but when you started it, it sounds like you didn't have any formal education beyond high school.
I have no degree whatsoever except the school of hard knocks and being beaten up. That's the only degree I have.
And that's awesome. And that's awesome. So again, I want to remind people that are listening that right here, you've just heard from a man, and you will hear from a man for the rest of the time, who does not have a college degree. He doesn't fit within the mold of what a lot of people may be telling you as a listener, that this is what defines a successful individual, and what only this type of individual has the opportunity to succeed is someone who goes to university or college. They have a 4, 6, 8-year degree. They get a job, work at it, make someone else wealthy, and then they can retire and live off their pension. Jack, you completely broke that mold. And I think that there is a shift happening underneath the bedrock of higher learning right now that says, not everybody needs to have a college education. And there's certain jobs that, like, in my opinion, if I would have heard about you, let's say 10 years ago, I would have thought, oh, well, Jack Miller, he manages his company. He's got hundreds of millions of dollars in assets under management. He's done over $1 billion in lending. Well, you have to have a master's degree from the Wharton's Business School or Harvard or Yale or something. And so very incredible to hear that you've accomplished where you're at today without what the rest of the world, if you will, deems as necessary to succeed. That's really incredible. And as speaking to dyslexia, I grew up in a family. I have a little bit of it, but my brother struggled very much with dyslexia. And even for them growing up in the 90s, it was still this stigma that, oh, well, we're going to put you in this special school, in this special class. And, it's done damage to them as their self-esteem, if you will, as they've grown up and trying to overcome the stigma that was placed on them. So I absolutely am. It's incredible to hear your story that that's something you struggle with, and yet you're still able to accomplish what you've accomplished right now.
I would recharacterize. I appreciate it, but I really don't struggle with it. People around me may struggle with it because my grammar's terrible, my spelling's terrible, but no struggles for me. I've learned I have so many weaknesses and so many problems. I need to focus on my strengths. I don't give really my weaknesses or my problems too much attention or focus. I need to focus on the task and solving my mission and using my strengths to do that. So those who have to deal with me struggle with it, frankly, more than I do. But I appreciate it. I appreciate it.
Absolutely. And absolutely. So you started off basically as a salesman on the streets of Philly, selling whatever you could get your hands on.
Pretzels,
and that sold pretzels, and then on the coins and anything else. And so where was the pivotal moment that you said, oh man, I see this opportunity in the commercial real estate space, and even more like becoming the lender? Like, a lot of people think that there's such a barrier to entry to that. What was there a catalyst? Was there a moment that really spurred you into wanting to get in that industry?
During the Jimmy Carter era, give or take, when rates were 15, 16%, I was buying a lot of homes in Philadelphia with a friend of mine. I love the field. Unfortunately, the partnership didn't work out. There was all kinds of issues. I don't want to go into them right now, but all kinds of issues, and everything went bust, and that exited quickly. But I got a taste for, again, it's unbelievable to me that someone could wake up in the morning, go out, and through their hard work, make money. And I thought the real estate business and the lending business and the finance business was a great way to do it. You don't need a medical degree. You don't need anything. just through your sheer determination, a lot of hard work, and a lot of failures. I could tell you one failure after another, after another. You just keep getting hit in the head with a 2x4, and you say, why the heck did I go back in the ring? But one failure after another led to a successful career. But for me, it was, I was very lucky. When I met my now wife of 32, 33 years, I really wasn't employed. I was making money any which way I can. And I applied for a job, and I got a job. I don't know why they hired me. I had no skill, no education in the mortgage business. And all of a sudden, they hired me on a Friday and said, okay, start Monday, go out. I didn't know anything. But it was, again, an opportunity. It wasn't largely commission, but it was an opportunity. They said, if you close a deal, we'll pay you. And I said, oh, this is great. I just got to go close deals. I didn't know what a deal was. But again, it was an opportunity. And we live today, and this was way before the internet, way before cell phones or anything, all technology. We're lucky. We're unbelievable. We live in a world of unlimited opportunity. It's a global world. So anyone could go out there and make money by just working hard.
Absolutely. Absolutely. That's maybe something that is being lost in translation. Again, going back to, oh, you need the college degree, you need these papers, you need these certificates, you need this, you need that. And there's a lot to be said about just straight hustle.
It's hustle. A quick story, and I'll let you go. I don't want to monopolize your
go
show.
ahead.
We're out with some people, Mother's Day, Thanksgiving, or Mother's Day, 3 days ago, 2 days ago, whatever it was. And there were a few of the people were talking about how they get what they call the Sunday scaries. Sunday night, they started to fear going to work in the morning. And I said, they asked me, do I feel that way? I said, no, I can't wait to go to work in the morning. I look at it as excitement, as what can I accomplish today? What can I do within the world today? So I don't look at it as the Sunday scaries, as some people refer to going to work. I look at it as opportunity to accomplish things.
That's incredible. And so that brings out a great discussion point, is the benefit of being an entrepreneur, of being your own boss, if you will. Now, you obviously have employees that work for you, but you get to set the vision, the course, and what you want to accomplish, and really what you want your company and your business to accomplish. And so for all of those who struggle with working, and this is something I struggled with, is the reason I wanted to branch out and start my own business, was I worked under people, but I felt like that leadership, the dichotomy of leadership just was not there. I felt that I believed I could make better decisions than what my current leadership could do. So I went out and I started. Now, granted, I was in the military, so going into a completely different field in the private lending sector. However, that ability to vision cast and then get other people on board, and then to go out and accomplish, man, you do wake up on a Monday morning and you're excited about, man, these are the plans. These are what we're wanting to do with our business and who we're going to bring along with us. And it is a shift in mindset to be able to look at your job, if you will, and have that type of anticipation and excitement. I wanted to cover real quick. You had mentioned, so there's this questionnaire that I have everybody filled out, and you filled it out, Jack. And one of the things that you had mentioned, so I had asked the question that if somebody wants to start to get invested in the real estate, commercial real estate, or just real estate in general, and we see this all the time. I'm sure you see this. You have somebody come to you and say, hey, Mr. Miller, I'm looking to, maybe not to you directly, but through your company, I'm looking to borrow money. I'm going to go out and I'm going to buy this commercial strip center. We're going to do X, Y, and Z. We're going to turn around, lease it out. It's going to be performing all this. They're very, what we would say, optimistic. And there was a statement that you had written. You said, don't get emotional and don't be too optimistic. People die from ingestion rather than starvation. So if you could unpackage that statement, because there is a lot of wisdom in there, more wisdom than maybe some people realize, but there is a huge amount of wisdom and insight in that statement.
So first of all, thank you for your service. I didn't realize you're in the military. So, people sometimes, people don't focus on that we're a free country today because a lot of people made a lot of sacrifices, and freedom is always very costly. So I genuinely thank you and all of the military from now for the past couple hundred years, because we're living in a free society, and you're speaking to me because a lot of people like you, a lot of young men and women really put themselves out there where a lot of us, me, didn't. So thank you. But what I meant to say, my dyslexia may come through there, is bad stuff always happens. You know, everyone's neighbor, it looks like they're a great success. But in my life, I struggle with things. So every property is great until I get involved with it, and then bad stuff happens. So you have to prepare for the bad stuff. If it's good, the good will take care of itself. But, you know, people always come in with, you can make anything look good and you could sell yourself on anything. And entrepreneurs and salespeople are great at convincing themselves. They believe it so much that they convince other people. But the reality is, whatever you're projecting, it may come true, but your timeline is going to be off. My experience is everything takes longer. Good stuff happens, but it takes a lot longer, and everything costs more than you expect. Everyone's always projecting the rents go up 5% and the cost will be this. What about when rents go down? So be prepared for the downside, because the downside always happens, always. And what I meant to put more people die from indigestion than starvation. And it's true. Again, that's probably my dyslexia came through there. What I mean by that is, and that's, I believe that's a fact in the country and the world today. But within business, it's a very delicate balance between growing too fast and growing at a steady pace. I've seen over the years, and it's happened with me personally, when you grow too fast, you're in trouble. So you see a guy, he does one, in the real estate world, let's say a guy who buys and sells property. See a guy who does one, then he does two, then he does three. He's doing okay. After he done his third, the guy thinks he's Superman. He thinks he's the next whatever superstar, and he's doing 5 at once. And inevitably, he collapses. Because where he may be able to sustain one deal, something going wrong, bad things happening in groups, and bad things happen in large waves. So he maybe could survive 1 or 2 deals, but he's doing 5, and that's not within his bandwidth. So it scares me when we see people who are growing at a very rapid rate without time for the deals to settle in. They just keep growing, and there's always a good reason and a good excuse, but inevitably, a lot of them tank. So we like slow and steady wins the race.
There you go. If I could, I want to unpack what I interpreted, what you wrote. And I know that maybe you said it was a misspelling, or maybe I didn't read it right. However, I think there's a lot of truth in that. Don't be optimistic. People die from ingestion, or you said indigestion, but I want to focus on the word ingestion rather than starvation. And I think, so as we're looking, you and I both are involved in the commercial real estate sphere. You're involved in actual commercial assets. My involvement sort of stays in the single family residence, but on the commercial lending, right? So commercial purpose lending. I have seen, when I think of the word ingest, I'm thinking of the deals that I want to consume, the deals that I want to loan on. I'm ingesting these deals. And this could be either on the lending side or somebody who's going out there to buy a property, reposition it, renovate it, build it, whatever. They're ingesting these deals. However, they're so hungry to just get a deal done. I remember the very first deal. Now, the very first deal I ever did, I made my loan, my very first loan. I originated it while in Afghanistan on the side of a mountain. And I thought I was God's gift. I had these grand visions of sitting in the Caribbean on a computer making loans. So when I came back, I was very motivated. I wanted to go ahead and exit the military and start doing this business full time. And so I started doing loans. I had investors very happy. And I started, like you said, I started to feel like, oh man, I'm hot stuff. Like nothing can go wrong. And I was so hungry for a deal. I was so hungry to ingest something that I was scared of starving, not having a deal. And I did my very first bad deal, a year and a half after I started. So we made a loan, ended up being, and this is a whole nother story, ended up being scammed out of the money. The gentleman that scammed us is in prison right now. He was indicted by the FBI in a different fraud. scammed us out of the money. The title company that handled that with the attorney, we're pursuing him because he violated escrow instructions and a bunch of other stuff. But that really shook me to my core, because that phrase, people die from ingestion rather than starvation, man, that was me. That I just wanted to consume anything and everything that looked like a deal. I wanted to take it. I wanted to do it. And I was so scared of not doing a deal, of starving, that I was willing to eat anything so that I could continue to grow. Like you said, grow. And I was not focused on slow and steady wins the race. So I know you said it was supposed to be ingestion, but when I read the way that I wrote it down, I was like, man, that is some powerful stuff, because that applies to me.
I think it applies to a lot of people, and we're effectively saying the same thing. By not doing a deal, you don't make money. By doing a deal, you could lose money. So I never personally lose sleep over not putting a tenant in, or not making a loan, or losing a deal.
Yep.
The worst I can do is invest some time. But if you do a deal, bad stuff can happen too. So I agree with you 1,000%. And by the way, what happened to you, I think it happens to everyone. Unfortunately, it's a reality. But you got back, you got beaten up, you got back in the arena and fixed it.
Yes, yeah, and I'm still recovering in some regards. So I had an investor come up to me, and this is before the deal went bad. And so we were talking, and I was explaining, this is my business model, this is what we're doing, this is how we're growing. I'm very confident. And he says, so have you ever lost any money? I said, oh my God, no, I've never lost money. What? That's horrible. I didn't say that, but my attitude, I'm sure the expression on my face conveyed that. And I said, oh no, sir, I've never lost my investors' money. He said, okay, well, come back and talk to me after you've lost $1 million. And I was like, who would want somebody that's lost money? And now, having gone through that fire, I realized that, man, the lessons that I learned. Now, granted, I wish I could have learned these lessons. I'm hard-headed, like you said yourself, Jack. I wish I could have learned these lessons in another way. But after walking through that fire, there's things that, man, I went back and talked to the investor afterwards. It was more or less, hey, who do you know that can help me out? And afterwards he said, Ed, you've probably learned more during that experience than a lifetime of an investor who's never lost money. He said, the fact that you've walked through that, you've been able and willing to push through that, communicate with your investors. He said, man, that's powerful. And now he's an investor. So it speaks volumes to somebody, like you said, that can get, laser focused, go through the fire, and then when they get knocked down, being able to get back up and continue to push through. Yeah. So
I agree. That's my whole life. So I have plenty of being knocked down. And that's a great segue to the next topic conversation. And we're going to be wrapping up here for the listeners and for you, Jack. So we'll talk about briefly this one last thing, and maybe we could have you back on the show at a future date, because you've got a lot of wisdom and insight, and I would love to dive in some other details and aspects of your investing career. But one of the things that you said is one of the ways that you've gotten in trouble in the past is getting involved in things outside of your box. Could you unpack that just a little bit of maybe what Sure. One of those things that you got involved with that was outside of your box? Yeah, so throughout my career, I've been a little bit adventurous, and we've been in the title company business. We invested in 2 or 3 title companies. We've owned an appraisal company, property management companies, a tax lien company, equipment leasing company. We've owned and provided a lot of good services. And in all of those, I never really lost money. I did really good because I understand the basic concept. But over the years, you get hit with things, guys, friends and family who are looking to raise money for different businesses. And I would invest here and there. And the reality is almost every one of them tanked. And if looking back, over a 30, 40, 35-year career, I said, you know what? I would have been I'm fine when I keep it within my box, things that I understand.
Yeah.
I understand the financial services, the real estate, the lending business, but when I invest in something that's outside of my box, forget it. And even within lending, You know, when we look back, the hindsight of, I'll call it the recession, the depression, whatever, 2006 to 2011, when we look back over, you know, hundreds and hundreds of thousands of loans that we had, the only money we really lost on the credit decisions were deals outside of our comfort zone that we did that we shouldn't have done. So we had our kind of underwriting guidelines, what we were comfortable with. For example, one of them was no land. We made a few exceptions here and there, and almost every loss we had was on the exceptions we made. So even besides sticking within the business, even sticking, again, we're not comfortable with land and things that require zoning and construction. So when we look back and say, where do we lose money out of 500 deals or whatever the number is, it's those deals that we made exceptions on that we weren't comfortable. Maybe it was for a borrower. We had some cases we've done 20, 30, 40 deals for a borrower, and he called us and said, hey, I have this deal. It's a special deal. It's a piece of land. Lend me money on it. The truth is that on that deal, that's where I lost money.
Interesting.
And unfortunately, if you lose money on one deal, you have to do 20 deals to make up for it.
Exactly.
In my business, anyway.
And
so
you know what, that goes back to that philosophy or that thought process. More people die from ingestion than they do of starvation. That idea that I've got to do a deal. I've got to do a deal, instead of saying, you know what? No, I don't need to do a deal. I will not die from starvation in this business, if you will, or really any business.
You're right.
Making a mistake is. Go ahead.
It's critical. You know, we do a lot of work within the distressed arena, Chapter 11, and people who have distress. And I've seen it. We were involved with a case, and I'll tell you just a quick story, and I feel bad for taking up the time, but you'll appreciate it. No. I worked his whole life. I'm guessing he was in his mid-60s. He had accumulated a third interest in, I think it was 31 or 32 Walgreens that were almost all unencumbered, or the debt was very little. Yeah. On paper, his third interest was, I'm guessing, worth $30 million or so.
Wow.
What happened was he did another deal on a shopping center during the downturn. It was probably a $4 or $5 million deal. That put him in default. He wound up losing his third interest on the Walgreens and effectively went from a guy who had a 10, 20, 30, $40 million net worth to losing just about everything because of one deal went south. And we were involved with that deal as a stalking horse bidder. But that's a classic lesson. And I've seen this almost every day of the week. You know, if not every day, every other day, I'm speaking to someone who has a pristine, beautiful portfolio. One little thing caused it to go south, and now the whole thing's tanked.
Okay.
So all it takes is one landmine. Excuse the expression, because I know you're in the military, but I use it.
No, it rings a bell.
One thing to go wrong, and you're toast. All a life's work gone down the tubes. I could tell you, just like I told you the story of the Walgreens, that was public record, so I didn't violate anything because it was in Chapter 11. I could tell you, I in my mind, I have 20 or 30 other stories, and these are good people. These aren't bad people. These are good, hardworking people.
So we're nearing the time, Jack, and you know, like I said, I want to keep it between 30 and 45 minutes. And man, I would love, I want to go ahead and just offer an invite for you to come back on the show at a later date. Would love to dive into, because there's two topics that I think. So the sophisticated investor is a community of investors that are looking to increase their business and financial acumen to be able to make those wiser investment decisions. And there's two things that you as a lender, now most people think of a lender, they think of a bank. So you're loaning money, you're wanting collateral, you're going to loan it out as debt. But you also operate in the preferred equity and the mezzanine space. And we didn't even get a chance to touch on that, but that is some interesting way to look at being in the lending space. If you're lending and you are operating in that pref equity, if you're operating in that mezzanine financing, and even if you're looking for different ways to structure a deal and implementing those type of equity or that type of lending into your deal structure, you can generate some really great deal structures. And unfortunately, we don't have the time to dive into that. But I do want to visit one point. You had just mentioned, you know, this gentleman spent a lifetime building up that, and he did one deal and it basically wiped out. And you've seen a lot of those throughout your career. If there was one thing that you could tell speak into the mind or the heart of a budding entrepreneur, or maybe somebody who is currently investing and they're wanting to continue to expand and grow, what would be one component of their portfolio or the way that they are going about business that you would just highly encourage them to have this as a, I don't want to say as a fail-safe, but as something that can help them weather that storm when it comes, because it's not if, it's always when?
Leverage and cash. Those usually, at the end of the day, are what destroys deals. Lack of cash in a deal and too much leverage.
Absolutely.
So I would say don't over leverage, keep the leverage low, and have a lot of cash reserves.
And if you have minimal cash, don't get that thought process that you're going to die from starvation. So you've got to go out and ingest the deal. You've got to go out and get that deal. That, man, I'll tell you what, when you combine that mentality, I'm gonna put that on a big print and put it in my wall, man. Like, that is huge. That mindset of ingestion. I'm gonna die from starvation rather than ingesting something, and it's quite the opposite. Quite the opposite.
It is. If you don't have a lot of cash, partner with someone who has a lot of cash.
There you go.
You don't need a lot of cash. All you need is to partner with someone with a lot of cash. And right now, the country is deal starving. People are starving. They think they're starving for deals. So a lot of people are doing a lot of deals. So if you have the deal, that frankly is as valuable as the capital right now.
Yep. Well, Jack, I thank you so much for coming on the show. I'm super excited about launching this. I think this is going to add so much value and content. And again, I want to extend an open arm and an open hand to have you back on the show. Would love to dive into preferred equity, dive into mezzanine. How do you work in mezzanine financing into your deals? But for those of the listeners that want to reach out, follow you, connect with you, what are some of the best platforms and the ways that they can find you?
You can go to Gelt, G-E-L-T, financial.com, and you can go to quickliquidity.com. Quick Liquidity is the provider. It's our equity company that we're providing preferred equity, mezzanine, seconds. We're lending on LP and GP positions that almost no one is doing it throughout the country. So go to those two sites. You can check me out on Twitter, Instagram, LinkedIn. Today on social media, everyone's out there for everything. And feel free to reach out. And it would be my pleasure to come back. I'll tell you, I get so excited when I start to talk about preferred equity, LP and GP positions and waterfalls and things like that. I can go on forever. Somehow, in my mind, the most boring topic, a partnership agreement or a structure of a deal, becomes incredibly exciting.
Yeah,
so talking about the structure of a deal for me is like heaven. I love it. So anytime, it's my pleasure. I light up when I think about it.
Well, excellent. Well, I promise you, when we have you back on, we are going to take the entire session to dive into preferred equity, mezzanine financing, and limited. So for those who don't know what LP and GP stand for, is limited partnership and general partnership ownerships. You're lending on those ownerships that people have in companies. So, man, I tell you what, that's exciting. I get excited. We can schedule the next one tomorrow. But thank you so much, Jack, for coming on the show. Sincerely, sir, I appreciate it. Look forward to having you back on. And thank you very much. I appreciate it. And that wraps up our show for The Sophisticated Investor. Thank you so much for joining me and joining our guest today as we dove into the specific assets and the market that they invest in. Please join us again when we dive into more investing techniques and strategies in different assets within different markets so that we can help you, the listener, and our community member build, protect, and preserve your family's generational wealth. This is Edwin Epperson, your host of The Sophisticated Investor. God bless and have a great rest of your week.